One of the biggest questions first-time homebuyers ask is, what credit score do I need to buy a house? You might have heard you need a perfect 800, or maybe someone told you 700 is enough. The truth is, it's not that simple. Different loans have different requirements, and your credit score affects not only whether you qualify, but also how much you'll pay every month. In this video, I'll break down the credit score ranges for different loan types, show you how much money the difference really makes, and explain how you can improve your score before applying for a mortgage. Your credit score is like a report card for lenders. It shows how well you've handled debt in the past, and it helps them predict how reliable you'll be in the future. The higher your score, the lower the risk for the lender. And when lenders feel confident, they reward you with better interest rates and lower fees. On the other hand, a lower score doesn't automatically mean no mortgage, but it could mean paying more for the same house. Even a small change in your score, say from 660 to 700, can make a big difference in your monthly payment. Over 30 years, that difference could add up to tens of thousands of dollars. So what score do you actually need? Let's break it down by loan type. FHA loans. These are popular with first-time buyers because they're flexible. You can qualify with a score as low as 580 with just 3.5% down. In some cases, lenders may even approve you with a score between 500 and 579 if you can put 10% down. VA loans. If you're a veteran or active duty service member, VA loans are a fantastic option. The Department of Veterans Affairs doesn't set a minimum credit score, but most lenders look for 620 or higher. Conventional loans. These are the most common mortgages, offered through private lenders and backed by Fannie Mae or Freddie Mac. Here, you'll usually need at least a 620 to qualify, but the best rates typically go to buyers with scores of 740 or above. USDA loans. Designed for rural and suburban buyers, USDA loans usually require a minimum score of 640, so while you don't need a perfect credit score, you do need to know which loan fits your situation. Let's look at an example. Imagine you're buying a $300,000 home with a 30-year mortgage. With a score of 760, you might qualify for a 6.5% interest rate. Your monthly payment would be around $1,196. With a score of 1660, that rate could jump to 7.25%. Now your payment is $2,048. That's a $152 difference every single month. Over 30 years, that adds up to more than $54,000. This is why your score matters so much. It's not just about qualifying, it's about saving money long-term. Many first-time buyers don't even know their credit score until they apply. That's a mistake. Checking your credit early gives you time to fix problems before they cost you. You can check your score for free through many banks, credit card companies, or online tools. But don't stop at the number. Review your full credit report to look for errors. Believe it or not, 1 in 5 credit reports contains mistakes that can drag your score down. Correcting those errors could instantly raise your score and save you thousands. If your score isn't where you want it to be, here are 3 steps you can take to improve it before applying. Pay down credit card balances. Keep your utilization, that's how much of your credit you're using, below 30%. Make payments on time. Even one late payment can hurt your score, so set reminders or automate bills if needed. Avoid new debt. Don't open new credit cards or finance big purchases right before applying for a mortgage. And if you need help, Free Mortgage Search can connect you with credit restoration resources designed to prepare buyers for home ownership. Let's clear up a few myths. Myth 1. You need perfect credit. Wrong. People buy homes every day with scores in the 600s. Myth 2. Checking your credit hurts your score. Checking your own score is a soft inquiry and doesn't affect it at all. Myth 3. A higher down payment makes up for a low score. While a bigger down payment helps, lenders still use your score to set your rate. Understanding the truth will help you focus on what really matters. Consider Alex, a first-time buyer with a credit score of 640. He thought he'd have to wait years to buy a home. But after checking his options through Free Mortgage Search, he discovered he qualified for an FHA loan with just 3.5% down. On the other hand, Maria had a score of 720. She went with a conventional loan and locked in a lower rate, saving hundreds each month. Both buyers were successful because they understood how credit scores shaped their options. So, what credit score do you actually need to buy a home? The answer is, it depends on the loan type. But the higher your score, the better your rate, and the more you'll save. The smartest move you can make today is to check your credit, see where you stand, and explore your loan options. And the easiest way to do that is through freemortgagesearch.com. In just a few minutes, you can see what programs you qualify for, compare offers, and take the first step toward your new home, without hidden fees or surprises. Buying a home is one of the biggest financial decisions of your life. Don't let confusion about credit scores hold you back. With the right information and the right tools, you can make a smart move, no matter where you're starting from. Don't settle. Don't overpay. Search smart. Search free. Subscribe for weekly videos on mortgages, real estate, and home buying tips.